Welcome, everyone. Yesterday's 25th annual EU-China summit in Beijing took a dramatic turn, ending a day early at China's request. Dr. Evans, can you walk us through why the summit collapsed so abruptly and why China is so dissatisfied?
Certainly. The summit was intended as a two-day event to deepen economic ties, but tensions soared when the EU openly challenged China's trade practices and dependence. The Chinese delegation, expecting warmer talks, felt blindsided, leading them to cancel the second day in protest, a rare diplomatic gesture showing deep frustration.
That's quite a statement. The fact that China chose to cut the summit short reveals a lot about the current climate. Could you elaborate on the specific issues that triggered such a strong reaction from the Chinese side?
Absolutely. The EU confronted China over its outsized trade surplus projected at $470 billion in 2025, surpassing even the historic U.S. deficit. The Europeans also raised concerns about unfair trade practices, forced technology transfers, and over-reliance on Chinese manufacturing, echoing recent American criticisms.
So, the EU's critique seems to mirror the U.S. approach. Does this represent a larger shift in global attitudes toward China, or is it more of a reaction to immediate economic pressures?
It's both. The U.S., under President Trump, set a precedent with tariffs and job reshoring, exposing China's vulnerabilities. Now, the EU is adopting a similar stance, viewing economic dependence on China as not just risky, but a potential security threat. This convergence signals a global rethink of how to engage with China.
Let's unpack the backdrop. President Trump's economic strategy has been credited with reshaping U.S.-China relations. Dr. Evans, can you explain how these tariffs and policies altered the dynamic and why other nations are now considering similar moves?
Of course. President Trump imposed sweeping tariffs on Chinese imports, raising costs for Chinese exporters and incentivizing U.S. firms to reshore production. This led to a dramatic reduction in the U.S. trade deficit with China and a revival of domestic manufacturing jobs over 500, according to Department of Labor statistics.
That's a significant turnaround. But critics argue tariffs can also raise consumer prices at home. How have policymakers justified the approach, and what has been the broader economic impact?
Tariffs do risk short-term price hikes, but the administration argued that the long-term gains like reduced dependence on China and renewed industrial capacity outweigh those costs. In fact, recent CBO reports note a $30 billion monthly revenue surge from tariffs, enough to consider rebates and even paying down national debt.
And these domestic results seem to have inspired the EU, right? Are there unique challenges the Europeans face compared to the U.S. when trying to replicate this model?
Yes, the EU is more intertwined with Chinese supply chains, especially in sectors like automotive and electronics. Transitioning away poses logistical and political hurdles, but the American example showing rapid deficit reduction and job growth offers a compelling template for European policymakers seeking greater economic sovereignty.
Transitioning from the American example, the EU has now introduced a policy called derisking. Dr. Evans, what does derisking entail, and why did it provoke such a strong reaction from the Chinese delegation?
Derisking refers to systematically reducing reliance on Chinese manufacturing and diversifying supply chains. For the EU, this means sourcing critical goods elsewhere and investing in domestic capacity, a strategy similar to the US, but tailored to Europe's unique economic landscape. China views this as a threat to its export-driven model.
It sounds like a seismic shift. Are there historical precedents where a major trading bloc took such coordinated action against a dominant partner? And what were the outcomes?
A comparable example is Japan's reorientation in the late 1980s after U.S. pressure. Japan diversified trade partners and invested in Southeast Asia. For the EU, the scale is larger and the stakes higher. If successful, derisking could reshape global trade flows. If mishandled, it risks supply shortages and economic friction.
And with China's economy so export-dependent, are there estimates of how derisking could impact its growth?
Goldman Sachs estimates that a 10% drop in EU imports from China could shave 0.5% off China's annual GDP growth. Beyond numbers, the psychological impact China losing its grip as the world's indispensable factory could spur domestic reforms, or conversely, more aggressive economic diplomacy.
Let's pivot to the domestic effects. Recent reports mention that U.S. tariff revenues are now so high that rebates for taxpayers are under consideration. Dr. Evans, how unprecedented is this, and what does it reveal about the current economic climate?
It's a rare scenario. Typically, tariffs are a defensive tool, not a primary revenue source. But with monthly receipts nearing $30 billion and a projected $300 billion annually, the Treasury is in surplus for the first time in years. This windfall has policymakers debating direct rebates to citizens and accelerating debt reduction.
Some argue this is a short-term windfall that could backfire if trading partners retaliate or supply chains are disrupted. Do you see this as a sustainable strategy or more of a temporary phenomenon?
That's an important concern. While initial gains are impressive, long-term sustainability depends on continued domestic investment and the ability to adapt to global countermeasures. If the U.S. can maintain innovation and workforce competitiveness, these tariff gains could fund broader economic renewal, but complacency would erode the advantage.
As we wrap up, what broader lessons can other nations draw from these developments?
The key takeaway is that coordinated economic policy balancing protectionism with strategic investment can yield surprising results. The U.S. and now the EU are demonstrating that challenging economic orthodoxy, when paired with decisive action, can reset global relationships and spark new cycles of growth.